Hello and welcome to The Trade on this Monday. Well, before we get to the charts, let's take a look at what traders are watching, and a double dose of potentially market-moving events arrives this week, with Americans voting on the next president and the makeup of Congress, and the Federal Reserve offering more insight on the path of interest rates at its monetary policy meeting. We'll also get interest rate decisions from our own Reserve Bank and the Bank of England. Intel will be replaced by Nvidia on the blue chip Dow after a 25-year run. That's underscoring the shift in the chipmaking market and marking another setback for the struggling semiconductor firm. Boeing shares, they've gained on bets that the plane maker's US West Coast factory workers will approve a new wage offer and end a 7-week strike that's halted jet production and hammered those companies' finances. OPEC Plus agreeing to delay a planned December oil output increase by 1 month as weak demand, notably from China, and rising supply outside the group maintain downward pressure on oil prices. And US oil producers Exxon and Chevron posted better than expected third quarter profit, outperforming their European rivals, as record US oil production cushioned the blow from a plunge in fuel margins. Let's get into those charts that matter now. And joining us, Louise Bedford from the Trading Game. Louise, welcome back to ausbiz. Great to have you on the show again. We're going to start with volatility, and there is plenty of, isn't it? Not the least, of course, being the US election. How are you seeing that all pan out in terms of the volatility at the moment?
Yes, well, I do think we need to look at the US market because as Australian traders, we do have an inbuilt bias towards our own market. However, there is a lot of action going on in the US at the moment. So putting your blinkers on right now is not a good idea. So let's have a look at the Australian market first. Now, interestingly, our volatility as measured by the percent is quite low, and it's only 2.05%. What that means, Andrew, is that we're able to put on some trades without fear of getting stopped out with those spikes that can sometimes hit our stops, and then the damn thing keeps running up in the same direction that you were hoping for. So if you'd like to have a look at my hot or not special report that I prepare for ausbiz every single time I present, it's on tradinggame.com.au/hot or not. And the facts at a glance: we only have 3 hot sectors. There are 12 cold and 2 in limbo. So it is actually, even though the Australian market is looking healthy from a technical perspective, it's running a little bit light on in terms of the sectors that are driving that positivity.
All right, but before we get into the sectors, let's then broaden this out to an index level in terms of the ASX 300. What are we seeing there?
Yes, with the ASX 300, it is actually replicated with the ASX 200 and the ASX 100, as well as the ASX 20. All of these ones are cold. So what this means is that our opportunity as traders looking to trade the Australian market, it is not in the top end of the market capitalisation. What we need to do, especially for this week and even this month, is look underneath the top 300 for our opportunities.
Okay, so let's then get sector specific, starting with tech.
Yes, well, this one is, of course, just so buoyant. I'm loving the look of this. It's got a typical Davis box look. For those of us familiar and using Davis boxes, it's where the share, or in this case, the sector, goes sideways, breaks up, goes sideways, breaks up, goes sideways. Now, it is currently hot. We can see that from the relative strength comparison, which is outperforming its own moving average. And it's also got quite a nice rewarding retracement trade look with a bottom candlestick reversal as the recent 2 weeks on the actual sector itself. So that one's looking like a winner at the moment.
All right, so that is hot in tech. What are we seeing then in small resources, Louise?
Small resources is in limbo. Now, we have got sideways progression here for the most part. And also, when we look at the RSC, the relative strength comparison, we haven't been outperforming for my mandatory 5 weeks to be considered hot. But something is hotting up here. We can see that from the RSC, but For me to actually act in this sector, I would want to see a break of that top blue line, which is the predominant resistance level. This is not quite ready yet, I would say, Andrew.
All right, still cooking then it would seem in small resources. Louise, energy. Let's take a look at that. What are you seeing?
Now, energy is showing such a classic chart pattern. If I was writing a book at the moment, Andrew, this would be in it, definitely. Not only do we have pretty much, when you look at the RSE, you have to say that's a clear trend. We've got all of that blue line of the RSE completely below its own moving average for weeks and weeks and weeks. But also look at that change of polarity. So what we've got is a drop through support, a recovery, and then in line with that support line, which has become a resistance line, we've got a beautiful candlestick top reversal pattern. Love it when I see a spinning top, and then down, down, down we go. So if you've got shares in this sector, you would look at either lightening up, tightening your stop, or in some way examining the opportunity cost, because the odds are they are going to have trouble lifting when the entire tide is pushing downward.
All right. So, Louise, that's what we're seeing locally. Then let's head to Wall Street and how this is all playing out. Now, of course, we are in the midst of earnings season, particularly those mega cap tech stocks that have driven the market over the past couple of years. Let's start with the Nasdaq and what you're seeing.
Yes, and this is always good for ETF information, exchange traded funds, because here we have got a beautiful hot sector and we are up against resistance right now, but look at that lovely pattern. That is shaping up to be that double top type of look, which I'm guessing, and this is only a guess because we have to go on facts, we're looking for a breakout above that top resistance line. It's likely this trend will continue. Not only is our RSE positive in relation to the Australian market, but we're above the moving average on the predominant chart as well. So looking for opportunities to go long in the Nasdaq.
Okay. What then of the S&P 500? What's that showing us?
Now, the S&P 500 is a lot smoother than the Nasdaq, even though the volatility is quite a bit lower, 2.81%. It has got a very clear outperformance of the Australian market as signified by the RSE. And also look at that beautiful pattern. Not only are we above our resistance line, those green candles are very positive. It's likely to come back, rest on top of that resistance line, which will become support and continue on if we're going to use Fourier analysis. Fourier analysis, of course, isn't the prediction that we would want. We're going on technical signals and probability. So it's assessing the probability. The odds are this will continue.
Louise, finally, let's round it out with a look at what we're seeing with equities in the UK with the FTSE 100.
Yes, now the FTSE is very interesting. I don't trade shares directly, but I look for option opportunities. So what I'm looking for is when the FTSE is cold, so it's underperforming the Australian market, and when it's hitting itself against that top level of resistance, then I'm looking for call options to right over the top of that resistance line. Now, call options we know gives us a little bit of income, but we have to hang on in there until that option expires in order to feel like we can keep that bit of income. But wow, when this is happening, when this shape is shaping up, it is a very high probability trade. So I'm looking for call options over the top of the FTSE.
Louise, you've done it again. Thanks for talking us through the charts that matter. Thanks for joining us in the trading game.
It's an absolute pleasure. I do love our episodes together, Andrew.
Absolutely. All right, that is the trade on this Monday.